So, good afternoon everyone. This is Santosh here. So today I'm going to give presentation about FiMM integration. So before that, I just like to recall about P2P process and get into the FiMM integration. P2P. So generally P2P means that procure to pay. Pay. So as we know that we have multiple departments in SAP, such as HR, SD, MM. Like as such, there are many modules. So for all these, everyone requires some materials or assets or whatever it is. So they cannot purchase directly. That is the reason there is a department called FI, Finance Department. So these all people will meet FI for the purchasing of any requirement, whether it is material or whether it is an assets or whatever it is. They need to contact FI. So for this, there is a process that is called PR, which is purchase requisition. Purchase requisition. So this is a purchase requisition. Basically, it involves whatever the people require, the department, particular department, whatever they require. So they will have the purchase requisition form to the FI people. Once they accept it, once it is accepted by the head of finance department, head of FI. So then from there, search of vendor searching will be started. Vendor selection. Once it is done, we request for the quotations. Once the quotations are finalized, we'll release the purchase order based on the agreement. We'll have agreements here where how much to send payment terms, and when to deliver, how much to deliver, how much, and quality. What all we require. So basically in agreement everything is finalized. Once this is done, vendor will be sending goods to the vendor will be sending goods. Okay. Goods to the warehouse. Here with this he'll be sending a goods receipt. So from here this will be done in Migo. The entry here is inventory on debit, GRIR credit. So once this is done, basically these are sent inside the warehouse. Stock is sent inside the warehouse. So after this, vendor will be sending invoice also, where the entry is
Santosh, could you please maximize the notepad screen?
Okay. GRIR account, debit, and account. So basically here before this, when the in P2P process, once the goods receipt we receive, so there will be officers called presiding officers. Presiding officers, they will be checking the quality and everything, whether the machinery is fine or not, whether it is having any damage or anything. So we'll be having that. So here there is a scenario called, once we receive the goods and Once the invoice is sent by the vendor, we'll do the payment. F dash 3 vendor payment. So here this is basically procure to pay. This is a purchase. No, from purchase to till the payment. This is a process. Here we have scenarios called matching, three-way matching. Three-way matching. PO we have decided at 100 rupees. At 10 units. And at the time of goods receipt, if it is same as 100 at the rate 10 units, this is fine. And the same of invoice also, when he said same 100 at the rate of 10 units, that is three-way matching. So three are matching basically: goods receipt, PO, purchase order, and invoice receipt. But for example, due to the fluctuations in the market, the price may go up or else down. So that is called, for example, the agreeing price is 100 at the rate 10 units. While coming to the goods receipt, if it is 120 or else 100, and at the time of invoice, if it is 110 or 120, so that is called two-way matching. Why? Because only PO and GR are matching but not invoice, so that is called two-way matching. But for suppose if it is GR, it is 110, at the time of invoice also this is 120, that is completely no-way matching. So the price of agreed, it is a different price, goods receipt is a different price, and invoice also it is different price. Based on this, we'll get the entries, we'll see in the further. So basically this is P2P process, from purchase to pay. And while coming to the FI to MM integration, so basically we have factors depending FI to MM. So what are movement? There are like a few factors that is depending FI to MM integration: movement types, validation class, transaction keys, validation area, validation modifier, and which is also known as grouping code, and the material types. So firstly, we'll see the what is movement type. Basically, when we receive goods, so there is a movement. I'll just I am just sharing the picture what I have written. One second. So if you can see here, so goods receipt movement, so 101, what, so when we see the 101 movement type, that is known as, so we have received the goods receipt, and when goods are issued to the production unit, that is known, that movement type is known as 261. When the goods sold to the customer, that is movement type is called 601. When we are scrapping of goods, in the wastage of goods, that is the movement type is 51. So when we see the movement type, basically we can understand the at which stage the good is. Like what are the goods have been done here. So this is a basic movement type. And while coming to the second one is valuation class. So valuation class, in organization we have multiple types of materials such as raw material, finished goods, semi-finished goods. So for this we need to classify the material. So for 3000 is a standard basically. 3000 indicates raw material. That's a class of valuation class. It is raw material, and 7900 indicates the semi-finished goods, and 7920 indicates the finished goods. Whenever we see this valuation class, it indicates okay, these goods are related to finished goods, these goods are related to semi-finished goods. So this is basically valuation class. And while coming to the transaction keys, and we have here transaction keys is third one. So there are transaction keys which are known as, for example, when we see the entry here in the older way, in the last we have seen here inventory account data to GRIR account. So basically we'll create the GLs. The FI team will create the GLs. GRIR account is a temporary account. GRIR account. So inventory account means BSX. The transaction key. If we see the transaction key as BSX, we'll understand that it is a inventory account. So the people MMT people will directly not enter the inventory account, but they will enter the just BSX account debit, and goods receipt means WRX. So they'll enter BSX debit and WRX credit. That it means that they will not enter, basically they will not enter direct inventory account data to goods receipt account. So these transaction keys are useful for that. And while we come to the transaction keys, there are multiple transaction keys. So here we can see the PRD. PRD transaction differs price difference, and GBB means offsetting entries for stock posting, and FRI means freight clearing. There are multiple transaction keys as such to indicate what exactly that mean. So as we seen, PRD means price difference, WRX means GRIR account, and BSX means inventory account. So why we use the transaction keys and why we use GL accounts, in the further process you will understand where the integration is done. And while coming to the what is valuation area, basically valuation area means it is defined, basically valuation area, one second. Yeah, basically valuation area is defined at organization level, but what does it mean means materials are valuated. Valuation area means materials are valuated. The material which we are purchasing, those are valuated at plant level or company code level. If we are defining at company code level, it means that each and every plant have the same price for all materials. If we are defining at plant, we can define at plant level and level. If we are defining at plant level, so we have different prices for each plant for all the materials. If we are defining at company code level, we'll have same prices for all plants. So basically this is done most of the cases, 90% of the cases, 90% of the cases will define the valuation area at plant level itself. Why? Because it differs from area to area. So most of the cases, 90% of the cases, it will be defined at plant level itself. So these are the basically valuation areas, like where materials are valuated at And while coming to the valuation modifier, so valuation modifier or grouping code is the same thing. So as I told you earlier, so if you can see here, this is the valuation areas. We have individual valuation area. If you define at company code level, we have all together grouping as one valuation group or grouping code. So if we are, so for example, if you see, we are defined at valuation area defined at company code level. It means that same prices for all plants. This is a Hyderabad plant, Bangalore plant, and Delhi plant. All these together, clubbed together, will have one chart of accounts and one GL accounts. This is known as valuation group or valuation modifier or grouping code basically. So all clubbed together, this is known as valuation grouping code. So for example, as I told, 90% of the cases will be defining at plant level, whereas different prices for each plant. Then also we need to define for one valuation area, we need to define one valuation group. I'll tell you what, like in the further. Basically, valuation areas are different plants. When we are defining at plant level, we have different prices for different plants. And if we are defining at company code level, we have all the same prices for all the plants. So these are the valuation. And while coming to the valuation classes, I told you that raw material, finished goods, and semi-finished goods also. So this is what valuation grouping code. Basically, valuation grouping code means clubbing together all the plants. If it is valuated at company code level. And what is material type? We have multiple, material types, right? Such as finished goods, raw material, finished goods, and spare parts. So each in company, in an organization, when we have the material types. So ROH indicates raw material and HLB indicates semi-finished, FERT indicates finished good. So these are the type of materials which we have existing in the company. Hava. So it's a trading of goods. For example, if there is an organization who buys and sells the goods, that material type, those are called as Hava. And we have a material packaging material in the organization. Though that material type is known as work. So we have spare parts. We are manufacturing only spare parts. Those material type is known as ARSA, and there are like services providers also. Those are known as that for them material type is known as DIN, DIEN. So these are basically DIN. You may have doubt basically. Material type we have an indication that ROH and semi-finish we have HLB. And while coming to the valuation class also, you have one second. In valuation class, you have raw material, and we are segregating as raw material and 7900 raw material, semi-finished and finished. And while coming to the material type also, we are segregating as material type and semi-finished. What is the difference between valuation class and material type? While coming to the raw material, semi-finished. Valuation class, whatever we have valuation classes, these are the classes applicable for tax. External purpose, these valuation classes are these will be considered for the tax. Basically these tax is applicable for valuation classes. While coming to the material types, these are the segregations we are doing for our individual own purpose to understand easy way inside the organization, so that we have like how many types of material we have. So for that these are different. Basically this is not applicable for tax. And while coming to the valuation modifier and plant level at material types is finished. Now we have valuation methods. We have two valuation methods in such as standard and moving average prices. While coming to this, standard indicates S and moving average indicates V. So standard price means we have fixed prices. Mostly these prices standard is allocated to the semi-finished and finished goods. So and moving average price means there is no fixed price basically. So it depends on the stock and everything. I'll just tell you stock and the value and the quantity whatever we are purchasing. So moving average will be mostly considered for the raw materials. Why? Because the purchasing is not decided, price is not by R, so by seller it is decided. That is the reason we'll have moving average price for the moving raw materials, and standard price is which we are selling the goods, so semi-finished and finished goods. So fixed, we will have the fixed price for this. It is not mandatory, but it depends. Most of the cases, 90% of the cases I'm talking about, most of the cases. While coming to the these valuation methods. So basically, what is the price difference? So we have here multiple one of two scenarios. Just normally price difference is with respect to MM happens at the time of GR. So price difference basically GR at the time of GR means we are comparing it to the PO. We are comparing it to the PO. And the price difference at the time of Miro, which is time of Miro in the sense invoice receipt, it happens in the case of where invoice is received a price difference from PO. So both Miro and goods receipt, it happens with the PO. So price difference basically when we are, I'll just tell you, in the case one, PO is purchase order is 100 rupees and the material master price is, if it is standard or moving average price, this is 120 and invoice is 130. So basically in in the material master record, we'll have the fixed price, whether it is standard or MAP, whatever it is, will have one price which is set in the material master record. So if it, now let's say, for example, the material master price is 120 and invoice receipt is 130. So at the time of GR, what is the entry? So we have agreed with the purchase order is 100, but material master price is 120. In the case of material master, with standard pricing, if it is standard pricing, what is the entry? So inventory account debit 120, price difference account 20. So here the difference is whatever the purchase might be, whatever the purchase order price might be, we'll consider only the material master price as an inventory. So GRIR we have what we have received as a purchase order is 100. What is the difference? It is 20 rupees. That is the reason. So in inventory account, we'll consider the price whatever decided in the material master. It is not related to the purchase order. While coming to the GRIR, we'll take the 100 rupees what we have received as a purchase order. That will do. What is the difference is 20. So this is basically at the time of standard. While coming to the moving average price, here we don't consider with the moving, always standard prices is deals with the price difference account. But while coming to the moving average price, will not consider PO. We'll consider only material management price is a fixed one. So in the moving average price, we have decided it is 120 in the material master record. So here if you can see here it is stock account 120 and GRIR account also it is 120. So there is no price difference here at the time of GR entry, goods receipt entry. It is the price is fixed. Whatever we have fixed at the material master record. And while coming to the scenario 2, for example, if it is invoice entry, invoice we have received at 130. So what is the difference now? At the time of goods receipt, the material master is 120 and at the time of invoice, the price is 130. Vendor has sent that is 130. So if you can see here, now let us assume that invoice is accepted for 130. Now at the time of mirror, what would be the entry? In the standard price, if it is standard, GRIR account data to vendor account general entry basically. But here GRIR we have received at 100, but the vendor invoice what is payable is 130. The difference is 30 rupees. So this is basically this is the price difference we have to enter. In standard, for suppose if in case of V, that is moving average price, here we have taken GRIR as 100 according to the PO. But while coming to the moving average price, if you can see here, inventory as 120, but PO is 100. Why we have taken 120 is in moving average price, we'll consider only the price of material master. So it is 120, even it is GRIR also it is GRIR it is 120. So what we have to pay is 130. So difference is 10 rupees. 10 rupees. So that is entry. This is at the time of when we know the stock availability. There are two scenarios at the time in moving average price. One is stock available and one is stock not available. So if you can see here, moving average price, vendor we have to pay 130. Stock GRIR is 120 we are taking because it is registered in moving average price. Difference is 10 rupees. And we are entering as stock account means inventory account. We are not indicating as price difference. Even it is 130 also, we are not 120 is material master record price and 130 is vendor price. We are not indicating this as price difference. The reason because is we know the stock material how much it is available. Basically the formula for this moving average price is moving average price total stock value by total stock units. So what is the number of units? So this is the price. So when we know the stock material is available, we'll enter it as not difference. Stock inventory itself, inventory account difference. How much is the difference? So inventory account 10 rupees and GRIR account is 120, and we have to pay is 30. For suppose in the moving average price, if you do not know the how much material is available in the stock, so then we can differentiate it as GRIR account 120 price difference. Why? Because we are indicating is price difference. The reason because we don't know how much inventory it is available in the stock. How much stock is available in the material master. So that is the reason we are indicating it is price difference. Only the difference is that if we know the stock availability, we'll enter it as inventory, and if we don't know the stock availability, we'll enter it as price difference. So if you can see here, once again, I just want to recap. At the time of, if it is standard in material master record, if you are maintaining the standard price, only standard price, at the time of inventory, it is to price stock inventory account is 120. What we are taking in the material master. One simple thing, guys, at the time of goods receipt, even it is standard price or moving average price, at the time of goods receipt, we'll take inventory as what are the material master price we are maintaining. It is standard price or moving average price. Whatever the price we are maintaining in the material master record, that only will be taken at the time of goods receipt. Goods, yeah, goods receipt. One second. Goods receipt, and the difference is shown in the while to set off the amount that is shown here. In the GR, basically in the goods receipt entry, what in the inventory will give the amount whatever decided in the material master record, whether it is standard or moving average. But while coming to the GRIR, if it is standard entry, we'll give the purchase order amount. If it is moving average price, we'll give only the whatever we maintained in the material master record. While coming to invoice entry, GRIR is only given whatever according to the PO, we'll give that, and the price difference according to the how much we have to pay payable, we'll clear the price difference. And while coming to the moving average, if we know the stock, we'll enter the difference as inventory. If we don't know the stock availability, we'll enter it as price difference. So I hope I've created some confusion, but fine. I think if you can understand, if you don't understand, you can ask me in the middle itself. And yeah, this is about price variations. And while coming into the basically, FA consultant job. What is a consultant job? While coming to the integration, we have 3 steps. One is creation of deals. The other one is creating other one is integration. Is done in OBYC, and this is FS00 FB. What what all GLs we need to create? That is raw material GL and finished goods GL and raw material consumption GL. Raw material consumption GL and increase stock GLs. So these are the GLs we need to create. And while coming to the number ranges, we'll be creating in FBN1, and we'll have the integration in FiMM OBWise. I'll just show you the screen. And like we have document types, right? Document types. For example, we know the document types. What is KZ and KR. As such, we have in even in MM also we have some document types, which is WA, that is known as goods issued. Goods issued to the production. And WE, which is known as goods receipt. And RE, which is invoice receipt. Invoice receipt. So these are basic document types that we need to aware of this. And now while coming to the integration of OB by C, so as I told, the transaction keys, right? BSX, WRX, we have multiple transaction keys as such. So if I'll give chart of accounts, so if you can see here, there are rules: violation modifier and violation class. So if you can we have violation class that is 3000, 7900. What are the which indicates the material which kind of material it is. We'll give that, and the accounts which have created in the GL accounts that will be assigned here to the transaction. BSX means inventory. That inventory account will be assigning it here, so that BSX means inventory account. So that is the integration between the FI and MM. So what is violation modifier? Violation, if you can remember. Valuation modifier is, yeah. If you can see here, as I told, if we have multiple plans clubbing together, we'll have violation group or violation modifier. Even if it is one also, why we have to create violation modifier. Even if we are evaluating at plant level also, we have different prices for different plant. Even then also, if we are individual also, we have to create for one plant one modifier, violation grouping code. Why? Because in that grouping code only Hyderabad plant will be there. The reason, even if it is one also, why you are giving the name as valuation grouping code, the reason is, if you can see here, we cannot assign valuation area here. That is the reason we can assign only valuation modifier. That is the reason, even if it is one plant also, we are grouping it as we are modifying it as valuation modifier, and we are assigning here. That is the reason, if it is one also, we'll do it. So basically, these are the fundamental jobs of the FI consultant, where we'll integrate between FI to MM. The rest of the process we need to understand, like we'll have to have the overview, what is the valuation class, valuation modifier, and the transaction keys. And what is the price difference? Basically, price difference is a important concept where it's one of the interview question what it is told. And I told you, right, whether the price difference, if you can know the sorry. So if we know the stock of the material availability, we will have enter it as account inventory account. If not, if we don't know the stock availability, we'll enter it as price difference. So for this availability, basically we can know in the screen. In accounting one tab, we'll give the standard price and moving average price in the material master record. So these are material master record, material master data. So here we'll know the details, even which price is given, whether it's standard or moving average, and what is the availability of stock and everything. We'll know the in material management record in accounting tabs. These are accounting tabs. In accounting tab 1, we'll have the standard price or moving average price. Once if we are yeah, these are the prices. And when I told you the valuation area, whether we are valuating at company code level or plant level, once it is fixed, we cannot change that because that is a fundamental setting in the organization. Once if we are evaluating area at company code level, it is fixed, or else plant level it is fixed. We cannot change that. So that is a basic details about FiMM. And if you have any doubts, you can ask me. I'll try to answer. I think I'm done. Basic understanding I have given. So I'm done, guys.